Wayne, welcome on. How you doing?
I'm doing well.
Good. How's your week been?
My week's been fantastic. Now
Good.
that we're in the new year, the
Yeah.
election's passed us, a lot of good things to talk about.
Yeah, there's a lot of crazy things to talk about. A lot of interesting topics that we're going to talk about today.
Right. So we're gonna talk about what have we seen this last year? What was it in 2003? How did 2004 stack up? And then a little bit of the crystal ball of what we foresee for this coming year, 2025, right?
Yeah. So let's get into it. The big topic right now is insurance.
Right.
And
we just had a big meeting over at the Shasta County Board of Realtors. And what was fascinating about that is they gave us some tips. So all you home buyers or home sellers, it's very important to kind of listen to some of this. It could really help you out in the future as far as keeping your rates in check. So one of the things that was interesting, because of the Southern California fires, we all know that we're going to probably see higher rates this
insurance
next year.
rates.
Insurance rates.
Yeah.
And we don't know exactly what they are. They talked about the difference between a cancellation and a non-renewal, what that looks like. And that gets really technical. But if you're working with your homeowner's insurance, if you own a home now, it's very important that you really work with them, talk through your goals. They're trying to do the best they can. Mm-hmm. And the other thing is have them explain the policy to you. Because even though you're getting a cheaper rate, it may not work to your benefit if something happened. And you also have to be very cautious about how many claims you're doing. So one of the things they brought up was if you make a claim on your homeowner's insurance, and it could be for $500, could be very minor, you may not want to do that because it sticks on your record for 5 years. And so it can actually jack up your homeowner's insurance.
So what you're saying is if they make a claim, a lot of customers have a lower deductible. So
right.
A lower deductible might be maybe a $500 to $1,000 deductible.
Correct.
And let's say they have a tree or something falls in their yard.
Right.
They're like, hey, this is going to be like $2,500 cost to us. We should do an insurance claim.
Right.
So they make that insurance claim. And what you're saying is that the insurance company keeps track of that. And it's not just that company. If they go to another
all
company,
insurance companies keep track of it.
If they go to another company, they're going to know they made a claim.
Correct.
Why is that?
They just all work together to...
somehow there's a database.
There's a database that they have and that they look at. And so it's very important before you make a claim, because that happened to Freddie and I. So we had a hot water heater break, and we thought about insurance claim because it kind of damaged some of the carpet in that. And so we reached out to our insurance person and they said, you want to think this through. You may not want to do that. And we ended up deciding not to. And we kind of, we cost us $1,500, replaced the hot water heater, but it didn't go on the insurance record. And so it's keeping our insurance lower.
Yeah.
So it seems unfair, but that's just the reality.
It's very unfair.
Seems very unfair, but it is reality. That's how they work.
Yeah. I mean, I'm paying for insurance.
Correct.
The insurance company says, hey, if something happens,
but it rates you differently in the future.
This is what you're paying for. But if you make a claim, we're going to nail you.
Yes. We're going to recapture any claim that you make.
That's to me, it's like, it's crazy how that happens.
It's crazy. But so we sold a house. It was approximately $700,000 house out Placer Road. Well, we put it in escrow with some buyers. The buyers went out to get their homeowner's insurance, but they had previous claims. They ended up getting quotes for $15,000 a year. Mm-hmm. So it fell out of escrow. Another buyer came along, and they ended up getting their policy for like $6,400 because they had no claims.
Wow.
So the insurance companies do track that very specifically. The other thing that you need to do is when you're talking to your insurance company, you want to make sure, like if say you only have a loan on a $500,000 house and the loan is only $250 and you just go, oh, I just want to insure it for the $250. Why would I do that? Well, that affects your homeowner's insurance too, and they can actually pay you less. You can actually
What you're saying is if something happened, then you're only insured for 250, not the 500,000.
Right.
So you want the replacement cost.
Right.
The land's not going to burn.
No.
The land
No.
will still be there, but it's
Right.
the replacement
But you can be
cost of the
penalized
structure.
by not having enough insurance. So, which is kind of interesting. There's a lot more to
Penalized
it.
from the insurance company?
Yes,
Huh.
because they get audited by the federal government.
I see.
And so it affects them. And so your payout might be reduced even. So again, talk to your insurance agents. Be sure you understand, what's happening with your policy, your personal policy, because the cheapest isn't always the best for you if something catastrophic happens. And that's really what it's there for. They're saying, hey, we'll cover you as far as a catastrophic thing, but this little, $1,000 here, whatever, it's like, we're going to penalize you for doing that kind of stuff. So
yeah, insurance. It's been a big topic for many years.
Yes.
Me and you did a podcast with
correct.
Patrick Kono from Goosehead.
Yes.
And if you guys are watching this, you can go back and check that out. A big thing that he was talking about is California putting maximum price amounts that you can charge for insurance, which made a lot of insurance companies kind of come out of the market because they couldn't get the premiums that they wanted.
Right.
And so they basically said, hey, you can only charge this much, which really hurt a lot of insurance, customers.
Correct.
Because they came out of the market, and so the competition's less, and on and on and on. So it's definitely a big topic. I think it'll be a big topic this next coming year, especially for California and Southern California for sure.
Oh, absolutely. Absolutely. And it's not just California. People go, oh, California, it's such a mess.
You got Florida,
Texas is very
Texas,
similar because, anything where there's tornadoes or big hail, hurricanes, a lot of, like in Florida, a lot of the insurance companies just canceled everybody and pulled out.
Yeah.
I mean, they're not even insuring there. So, it isn't just California, it's the whole country, for whatever reason, climate change or just, catastrophic events and stuff. Yeah. So anyway, that's kind of one of the things you need to think about. Now, from the buyer's perspective, so you're a buyer, you've been pre-qualified with Pete, and now I'm showing you property. Freddie and I are running all over the universe to find you that perfect house. So what we need to do is, once we have you've figured out the home that you like, we need to get a quote immediately. Insurance
quote. Once you have the address, definitely works.
Yeah, once you have the address, we got to get a quote because we got to get it to Pete. Your lender has to know how that's going to feed into your
and
ratios.
You want to get it you want to get it fast because the insurance companies like Goosehead or State Farm, Farmers. I mean, State Farm's not doing homeowners insurance, but the ones that actually are, they're like a week out for a quote.
Right.
I mean, I was talking to an agent just a couple days ago from Farmers, and he was saying to do one homeowners insurance quote for one customer, it's about a 2 to 3 hour process.
Right.
10 years ago, it was like 15 minutes, but now there's so many companies they have to price it out. Hey, what about this? And what about this? And what about this? And so it's a process they have to go to, and it takes hours. And so you have all of these buyers that needing quotes. If you want to get a quote right now, it's like a week turnaround time before you're actually getting a quote for a homeowner's insurance policy. So it's for sure you want to get on this right away.
Right. So we need to, as a team, work together, the three of us, to kind of massage how we write the offer. We've been doing this a long time, sold thousands upon thousands of houses, and the landscape's changed the way we write an offer, and we have to be very strategic because when we write that offer, we may need to, obviously it's a contingency about insurance, loans, and all that, which feeds together, but we may not want to be spending money immediately on pest reports, on
until you have
homeowner insurance, until we know it's a go. Otherwise, it could be a real problem. You're spending money that you may not get back.
What about that person that wants to sell a house, and they want to make sure that their home is insurable and covered, and Is there some stuff?
It's totally dependent upon the buyer applying for insurance for that home, because whatever the insurance is may not be what's coming next for the buyer.
Yeah.
So it's good to know. But what's really important, this is one of the things that we've seen, is homes can be declined because they haven't cleared around the property properly.
Yeah.
And so they go to sell it, and then CAL FIRE goes out there, whoever does the inspection, or the insurance companies now are doing inspections, and they're saying, hey, this is uninsurable the way it is. Mm-hmm. We're going to decline. There's no insurance possible until you do X, Y, and Z. Mm-hmm. So that's been another issue, we have to be conscious of.
Yeah.
So, all in all, I think it's really good too, because when there is a fire, you don't want your firefighters protecting a house where the homeowner didn't do their job.
Yeah.
So somebody else's house is burning that's savable, but
and they do look at that.
Oh, they do definitely do.
They look at that. That one's done. That one's done. That one could be saved. Let's hit that one.
Yep.
Yeah.
Yeah. So it's things to think about. So especially when you're going to sell, because the other thing is it can impact the sale of your home. Say I have your listing, or you're going to list your house, and you have all this brush, and you're back up to a green belt, and all this, and you haven't done anything, and it goes on the market, then you go in escrow, and then it falls out, and that's not good. Or, the buyer's going to take a pass on that because they're not capable of doing all the work or hiring it to be done. So you want to make sure that your home is in order so you can sell it, and Pete can get the buyer in.
Yeah,
right?
For sure.
Yeah.
For sure.
So let's switch gears now that we beat that to death.
Yeah. Yeah.
But it is a definite consideration and something we're going to really have to focus on this next year. Mm-hmm. So let's talk about what has happened this last year.
2024
year to date. So 2024 year to date, what we saw is home prices basically went up about 1% from 2023. So there was a small increase, which was positive, because in prices in 2023 actually went down compared to 2022. But then it kind of bounced back, and it's nearly the same level for the average sales price.
Yeah, that's the average sales price. It doesn't mean that someone's value went up 1%.
No.
Can you explain that?
Yeah, well, so when you look at it, like for instance, if we make a chart monthly and we follow from, say 100,000 on up to over $1 million, and certain price ranges are going to go up more than others.
Yeah,
based upon location. So that's kind of the aggregate of all the sales in the MLS in our region.
1%.
1%
Yeah,
overall.
Went up 1%.
Overall.
Yeah, which last year you were saying it was down.
It went down from the previous year. Now it bounced back up.
So in 2022, the average sales price was $428,800. 2022,
correct.
2023, it went down to $421,000. Really not a significant drop. 2024 then went back up to 427, roughly where we were at in 2022.
Close to it.
Yeah, but we did see a big jump from 2021 to 2022. The average sales price from $399 to $428. That was a big year.
Very big.
Now, if I look at this, I'm just kind of in my mind going through this. 2022, 2023, and 2024, pretty much, a straight line. Pretty much a straight line, almost a straight line.
Yeah.
And basically, what that's saying is that the market's pretty steady.
Yes.
Steady as she goes.
Steady as she goes.
It's not a crazy boom market. It's not a bust market. We're not seeing a huge crash. It's stable. It's stabilized, which is good.
Yes, we like that. Yeah. So we had a heavy uptick from basically 2018, 19, 20, and we hit our high in 2022. And now we're just kind of stabilized. Yep. It's going to bounce back and forth there depending upon
Yeah.
A little bit of interest rates, but not a lot. It just seems like
And there's places in the country that have seen significant lower average sales price.
absolutely.
Like Austin, Texas, I know is going through it right now with their market, but our market's been pretty steady, pretty strong.
Absolutely.
I would call this a strong market.
I would. The thing that tells me it's a strong market is the number of days on market. So the average listing that's priced at market and goes into escrow closes in about 85 days.
So that was the average last year?
Yes.
So last year, if you put your home on the market, the average was it stayed on the market for 83 days before it was end up sold.
Yeah.
Gone.
Put it on MLS, sold
Closed.
in 85 days.
Closed.
Closed.
Not meaning offer, get an accepted offer. That's closed in 83,
Closed.
which is super fast.
So that's, you think about it, that's very fast. It's almost within 3 months, you're moving.
By definition, that's a seller's market, right?
Well, it kind of is and isn't. And you got to
depending on the sales price.
Depends on the sales price. But this is interesting because to me, the fastest sales were between $850,000 and $900,000, 41 days. So that tells me there was a lot of cash offers. There only 15 houses sold in that category, though.
Yeah.
So that was kind of interesting to me. But then you go up into the 500 to 550 category, and it's up to 100 days because there's more competition.
Yeah.
It's kind of interesting how that works.
Yeah, even the 300 to 350 is 75 days.
Correct.
200 to 250 is 86.
Yeah. Well, the other thing is as you get into the less expensive homes or depending upon the category, a lot of times you'll go into escrow, you'll have a home inspection, and then
something's going to...
Things pop up. Yeah. There's dry rot. There's
not as nice of properties.
They're dated. Things need to be done before you close the loan, or there's a lot more wrangling that goes on at that point.
Yeah, that makes sense.
Yeah. Okay. So now let's talk about inventory. So in 2023, there was about 3,178 homes that came on the market. Roughly. And then in 2024, we had an increase of 167 homes that came on the market. So that's a 5% increase. Yep. So there's more product on the market. And I think my crystal ball is telling me we're going to see more of that. Mm-hmm. There's going to be more selection for a number of reasons. So there's just movement in employment. People are moving, coming, going. Insurance rates are going up, so people that are on the margin, they're going to start selling their homes in different areas, where all of a sudden affordability really becomes an issue. Plus, I think that there's a lot of people that are over 65 into their 70s and 80s that have held on a long time not to sell, but now they have to sell to either be with family or they need to move in assisted living. And I think we're going to see more housing come on the market.
I agree. At the beginning of the podcast, you were saying because after the election.
Oh, that was big.
After the election, a lot of people start pulling the trigger. And I think in addition to that, if you look at the last 3 years, the last 3 years in these higher interest rate environments, a lot of people needed to make a move. They needed to downsize. They needed to upgrade, but they haven't yet because they're worried. And there's
Correct.
a little bit of fear of maybe the market crashing or of something happening where, and to go from a 2%, 3% up to a 6 or 7%. But now I think it's more of like, okay, this is the normal and we're going to be okay with this. There's not going to be a crash. We're not, there isn't a crash. The other thing, Wayne, that's happening or that has happened in the last 3 years, wage inflation.
Yes.
People have made more money than what they were making back in 2022. So there's been a wage increase, and I'm just talking about most blue collar. There's wage inflation, so people are making more money. And if we see a straight line the last 3 years, the income's gone like this, but the home values have stayed here.
Right.
And so what does that
do?
So
the affordability
makes it more affordable. So I think that's going to also help our give us a tailwind instead of a headwind this year.
Well, the other thing that happens that I've seen, I've been doing this all my life. I'm, over 30 years in the industry. And what I've seen is when we come into a market where in the last few years, people get conservative and they start paying off debt. They start pulling in their purse strings, and which really helps their debt ratios. They start qualifying for more.
Yeah.
It becomes a whole different thing. And then they go, where am I going to put my money? Maybe the stock market is not the place for me to put it. And maybe I need to buy more real estate because it has and they saw the appreciation go up and they go, whoa, I don't want to miss that boat, which is kind of interesting. We did that chart, that 50-year chart of how many times has
homes appreciated
or depreciated. In 50 years, homes only depreciated minorly, except for 2008.
Yeah.
By 1%.
82 years, only 7 years out of the last 82 years.
Oh, was that 82 years? Yeah.
82 years, home prices, only 7 years where they actually declined. 7 years,
and they were minimal.
Out of 82. Yeah, so 2 years were like almost nothing.
Right.
Down 1% or something. But that was according to Case-Shiller report, which is like the gold standard of the home price appreciation index. They've been tracking this for many, many years.
Many, many years. Yeah, it's kind of incredible. So it's a great place to, get in a home, and you got to live somewhere. You're either buying a home for somebody else or you're creating equity.
Yeah. So
it's just a wonderful thing.
Yeah. So wages have gone up over the last 2 or 3 years. The other thing that's gone up is rent. So like those first-time home buyers that had a hard time in 2022, when it spiked like that in 2022, like it was very hard. But it's getting easier because their wages are going up, right?
Right.
But also their rent is going up.
Right. And this is the interesting thing about Reading. In the next 5 to 10 years, we're going to increase population another 5,000 people. Yeah. Where are all the rentals? Who's going to be building rentals? Where are the rentals coming from? The other thing that I see is we work with a lot of people that own rentals, and they're at an age where they've had their appreciation. They're in their 70s, going towards 80, and they're done. And now they're selling them off.
Yeah.
Right? Well, investors aren't buying those as rentals again. What's happening is homeowners are buying them. So there's less and less rentals, but we're going to have a population that grows. And so rental prices are just going to continue to rocket.
Yeah.
And then with fire insurance and all that, they're going to have to collect that. The landlords have to collect that to keep a positive cash flow.
Yeah.
So you want to get out of your rental, at least have a plan within the next couple of years, because you're just buying a house for somebody else.
Yeah.
And the other advice too is to think about it, because a lot of times we get first-time home buyers, and they want a nice house. They want to go into that second-tier house, not the first-tier house. So what you may want to think about is where you live in now. What does that look like? Maybe you just want to buy a house that's at the same level of condition as your rental. And then improve it slowly, get some years behind you, you'll build equity, and then go up into that next nicer house.
Yep, absolutely.
And then turn that into a rental. I mean, we've seen that a lot over the years. And then you start building this portfolio of retirement income.
The sooner you can get in, the better. And again, the first-time home buyer, the sooner you can get that home fixed, because when you buy that house, they are locking in that mortgage for the next 30 years. So their payment's not ever going up. But guess what? Their income does.
Right.
And
inflation,
so that payment gets easier and easier and easier. So it's eating away. So the sooner the better. And the longer we wait, the more time is going to pass to where the home prices are going to creep up. It's not going to, in other words, what I'm trying to say is it's not going to get any easier.
No.
It's always been hard. It was hard when I bought my first house in 2002, over 20 years ago. I bought my first house, and I was scared because my house payment was almost 50% of my monthly income.
Right.
That's very scary for somebody.
Absolutely.
But when I got in, my income continued to rise, and that payment got easier and easier and easier. And then 3 or 4 years, I had $100,000 in equity.
Right.
Not to say that's going to happen. You know, I do think home prices are going to continue to rise, but yeah, get in as soon as you possibly can.
Yeah. So, for instance, this goes back to 1980, let's say. So I was selling a 1,600 square foot, 3-bedroom, 2-bath, 74,000. That same house now is somewhere between 350 and 375.
Mm-hmm.
I mean, it just marched up, and then and then I built a house down in the Monterey Peninsula for 400,000, and that house today would sell for almost 2.5-3 million.
Yeah.
So you never know. You just got to get in the market. Mm-hmm. I mean, it was always a stretch, but as long as you can cover it, it's pretty cool.
Yeah.
So, fantastic. So, your prognosis for mortgage rates and all that this next year, what do you see?
Today, interest rates got a lot better. The bond market's rallying right now.
Okay.
We're up about 50 basis points on the bond market, which basically means interest rates are coming down today.
Okay.
So what's interesting about that question is in September of this last year, everyone thought that the mortgage rates were going to get better from where they were at in September. Now in September, if we go back, interest rates were for a 30-year fixed mortgage in August and September, interest rates were hovering right around 6.25% to 6 1/8, right around on a 30-year fixed mortgage. If you look at the chart, well, as soon as the Feds started raising interest rates, the 30-year fixed mortgage started climbing, and it's been climbing since.
Okay.
And so the last 3 or 4 times, the Feds have lowered the federal funds rate almost a 1.25%. I want to say 1.25%, and the 30-year fixed has gone up from there. So we're sitting around 7 to 7.25% right now on a 30-year fixed rate. So the big question when you say, hey, what are rates going to do is what's inflation going to do this year?
Right.
And that has yet to be seen what inflation is going to do with the new administration. They're talking about a lot of tariffs, and that's a big reason why interest rates have been climbing is because of the scare
inflation
with the tariffs. Yeah, and prices increase. And so if someone's going to loan their money for 30 years, they want inflation to be as low as possible.
Correct.
Which is why interest rates did really good today because the inflation numbers were a lot better than what estimates were. So my thing on interest rates, I see us staying around the 6 to 7% range. I think that it's kind of a fine line that the Feds are walking right now because they could continue to lower interest rates, the short-term end of the curve. They could continue to lower that, which will spur on more inflation over time.
Right.
And so if we can keep inflation in check this year, I think that we're going to see, interest rates are just going to be steady as she goes around 6 to 7%. In my opinion, that's where we're going to be. Unless we see a big catastrophic something black swan that we don't know about.
Right.
That could happen. And if there is an event like that, then that would bring rates down. So
in layman's terms, what that means, the black swan is something really out of the ordinary that could be bad.
Bad. Like a war.
A war.
A war or like a pandemic, like we saw with COVID.
Correct.
Or like some kind of, something.
Something or the market really crashes. Stock market just tanks.
Yeah. And so what happens there is people take their money out of equities and they put it into longer term.
Right. Physical assets.
Mortgage debt.
Yeah.
Yeah. They park it.
Right.
Yeah.
Right.
So
it's kind of interesting. Yeah. I know there's been a lot of talk about inflation and different points of view, part of it being the political atmosphere with China of, we're going to have all these tariffs and, we need to move all the manufacturing out, blah, blah, blah. Well, in order to do that, that means you have to recapitalize the manufacturing in other parts of the world, which a lot of it's gone to Mexico. And they're like one of our biggest trading partners in that, but it's inflationary because it costs more to move all your equipment or redo your contracts and all that. But overall, long term, that's probably a good thing. But right now we're paying for it.
Yeah.
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 Yeah. The pandemic didn't help us either, because there was it shut down a lot of stuff. A lot of businesses went out of business, and just became inflationary.
Yeah.
So,
and even during when interest rates, I mean, we all want interest rates to go down, but
sure.
I honestly I wouldn't want interest rates to go to 2 and 3%.
No, God, no.
The reason
That means something's really bad.
Well, yeah, it's something really bad happened, or something's bad happening. And I mean, go back to 2021 when you were trying to buy a house. There was 15 offers, and you had to pay $50,000 over asking price.
Correct.
So you want to pay $50,000 over asking price, or do you want to get the price at a good price and have a little bit higher payment? You know what I mean?
Sure. Well, and then the other thing is this: when things were happening like that, cash was king, because you could outbid anybody else. And like, if you were a first-time home buyer,
it was hard.
It was really hard to get your offer accepted. And as a first-time home buyer, you may not have closing costs. So let's say you're buying a $400,000 house, and you need 3% of the closing costs, not just your down payment, but your closing costs. And so that could be $10,000 to $12,000 more to get into that house. And if you can't get that seller to give you a credit on it,
you weren't doing it.
You couldn't get in.
Yeah, you can, and that's why a lot of buyers didn't buy. Like, oh, I'm just going to wait for this market to be over with.
Yeah,
wait for it to slow down. Well, then
then interest rates
go up, payments go up. Well, now you have the ability to make an offer, have the ability to get closing cost credits. You have the ability to get a good price for that home. So there's never going to be an easy time to buy a house.
No.
Interest rates lower, it's not going to get easy. Interest rates higher, it's also not easy.
Yeah.
Right?
Right. So it's always that teeter-totter, but the main thing is to get into a home, because you got to live somewhere. You might as well have it work financially for you. Yeah. And have a wonderful lifestyle with your, family, if you're going to have a family, or, just be able to really enjoy where you live.
Yeah. Absolutely.
Yeah.
Yeah. Anything else? Any other predictions you got for us, Wayne, this next year for 2025?
I think we're gonna see more construction happen around town. They're starting down at Hartnell and Cypress. They're starting to build the medical center.
I saw that.
Yeah, it's pretty exciting. I walk my dog down there almost every day. I'm watching the construction. And that's going to be oncology, I believe, center over there, which will create some employment. We've talked about this before, the airport's building, the industrial parks building. You have more enrollment out at Bethel, and you have the tribe. They're going to be building a hospital. So there's going to be a lot more employment coming into this area. And
I'm excited for that.
Growth. I'm excited for the people too. And you never know. It's, I look at the LA fires, and it's horrific what's happened down there. And I'm just wondering, what is the impact? You have 150,000 people dislodged. And maybe people that were thinking about retiring to Northern California because they come up here on vacation, they love it, it's cheaper. Are we going to see some type of migration once they start getting their insurance money? Because, for instance, in the Carr fire here, we had 800 homes lost. Out of the 800 homes lost, only 25% have rebuilt.
Yeah, a lot of them took the cash.
They took the cash. They moved other places and all that. And so I'm wondering if that area down there, we're going to see a small percentage of people maybe that were thinking about moving to our area actually pull the trigger on it now, because what are they going back to? Especially if they're older. We see a lot of that. It's like, hey, I can buy something.
And it's big money.
It's big money compared to the money here.
$50 million home. I mean, you're getting a check for $70 million or something.
Or what, say your house down there was worth a couple million or $3 million or $4 million. You get a check, and you could buy an awesome house for $1 million around here. And have money left over like crazy. So it's just kind of interesting. You never know. That's just... I'm just wondering, is that going to push our home prices up?
Yeah. Yeah,
So
I think you
if
got.
you're sitting on the
got a
fence,
good point. I mean, Shasta County is a beautiful place to live.
I love
There's
it
a lot
here.
of things happening locally. That it's growing. Population's growing. And a lot of people want to keep it small and keep it. And yes, I do too.
I
but
do too.
I think it's inevitable that it continues to grow,
Right.
traffic and everything. But if you're thinking about it as a monetary and is it a good investment for a home? Absolutely. It's a great place to start to build, to own a home, great schools, and there's a lot of great things happening in Shasta County coming in. So.
Yeah. Well, great. This has been fun.
Thanks, Wayne.
Thank you, Pete.
Always good.
Yeah, and our contact information will be somewhere around somewhere.
We'll put your contact info, phone number, email. Reach out to Wayne if you're looking at listing a home, buying a home, have questions about your insurance or anything. He's a great resource. I hit him up all the time.
Yeah.
And of course, if you want to get pre-qualified, buy a home, I'd love to help you and your family out. Thank you so much.
Absolutely. Thank you.